afternoon and welcome. This is a special edition of Business Incorporated coming to you live from Lagos. I'm Chimeze Obi Iwago. In about an hour from now, Nigeria's Central Bank Governor Godwin Emefiele will be announcing the outcome of the two-day Monetary Policy Committee meeting that started on Monday. A telecast of that communique briefing will be live here on Channels Television. Meantime, we are opening our studios for pre-MPC briefing and analyst discussions with a selected team of economists, finance and consulting experts here at our Lagos Global Headquarters in the next 10 minutes. And that forms part of today's Business Incorporated. Channels Television Business News editor Bosun Omofai will be anchoring the live studio panel analysis from the Central Bank Headquarters in Abuja in a few minutes' time. Do stick around. Now we'll begin the show in Ghana. Ghana's inflation will fall faster towards government targets than expected, and that's according to the head of the central bank, raising prospects of a cycle of interest rate cuts as it held benchmark borrowing costs at 26.0%. Inflation, much higher than in comparable African economies, has dogged Ghana for years, a symptom of a broader economic crisis that emerged in 2013 with falling commodity prices forcing the government to seek financing from the International Monetary Fund, which prescribed an austerity program last year. While Ghana's broad measure of consumer price inflation rose to 16.9% in August, having dropped from 19.2% since March, the central bank governor said core inflation, which excludes energy and utility prices, had continued to fall. He said inflation would hit the bank's target of 8%, plus or minus 2 percentage points by the second quarter of 2017, rather than the third, as previously forecast. In the meantime, investors are pausing for breath as the U.S. Federal Reserve starts its two-day policy meeting today. In Asia, the Bank of Japan has also started its two-day policy meeting, and there's more market uncertainty about what the bank could announce. Let's cross over now to Frankfurt to talk more about this. DWTV Channels TV financial correspondent Janelle Dumalon joins me now. Good afternoon, Janelle. Now, BOJ Fed meetings begin today. How optimistic are investors?
Hello. Yes, investors all over the world are basically hanging on to the edge of their seats to see what will come out of the Federal Reserve and the Bank of Japan and the Bank of Japan policy meetings. Now, as you can see behind me, investors here in Germany seem relatively relaxed. The curve is going up, as we can see there, but globally, it seems that investors do not really seem to think that the Federal Reserve will raise rates this week, and that could be where this relaxation is coming from. Most investors, however, are adopting a more wait-and-see approach and are disinclined to do anything before they know for sure what's happening. Now, I've seen numbers that say less than a fourth of investors think a rate hike will happen, but they will definitely be scanning the statement for clues that a rate hike could happen in December instead. Now, for the Fed, the question is, of course, simple. Is it, will the rate be raised or not? But when it comes to the Bank of Japan, investors are less clear about how they feel. No one really knows what the Bank of Japan is going to do. It's hard to read the signals. So there's a lot of speculation that the Bank of Japan could perhaps get its already negative interest rate even deeper into negative territory. There is speculation that perhaps the Bank of Japan will expand its already massive asset buying program. But the sense that we're definitely getting here is that in terms of monetary policy, the Bank of Japan could be running out of firepower, and it's hard to guess what they're going to do next, and investors are trying not to do that.
Well, Janelle, for us here in Nigeria, we're also in that position, wait and see, as the CBN will about now or in a short while announce its own monetary policy. Now, let's look at Bayer. Of course, Bayer now was in positive territory after it said it now expects higher revenues and earnings over the next few years. That's after announcing that planned $66 billion takeover of Monsanto. Does that mean shareholders are all in support of this deal?
Well, not entirely. You know, with a deal this big, and it is a very big deal, as you said, it has a $66 billion price tag on it, it's hard to expect only negative or only positive reactions across the board. And we're seeing that with the buyer shareholders. Some are happy that this price tag, while hefty, is actually lower than expected, and that lower price tag is perhaps attributable to Monsanto's weaker bargaining position as the prices of corn futures took a downturn. And as we know, corn is Monsanto's core product line. And on the other hand, so there are those who are happy about that sort of discount, and there are the other shareholders who are worried that such a big buy will sort of impact on buyers' flexibility to make other acquisitions. Remember that Bayer actually has quite a diverse portfolio. It has pharmaceuticals, it has crop sciences, it also has animal health and plastics. So they're worried that such a big buy will concentrate Bayer's business on just these two things. And that could happen, you know. After this buy, it's estimated that around 50% of overall sales, roughly 50%, will come from this new agriculture business and 50% from pharmaceuticals, which is its core business, and that is the brand for which Bayer is known. We all know what aspirin is, of course, and many are worried that the medicines business will be neglected as efforts to integrate these two businesses go on. So on the other hand, there are even more shareholders that say, you know, with such a growing population around the world, agricultural businesses will only grow. Bayer is making a really good bet here. So as you can see, there are a lot of divergent opinions from the shareholders of Bayer on this deal.
Right. One of the data coming out from Germany is actually the producer prices. That index dropped more than expected. What does this mean for the German economy?
Yes, exactly. So we saw from data from the Federal Statistics Office that producer prices dropped in August 0.1% as compared to the previous month, and that's been the first drop in 5 months, and that is why we're noticing that now. And it also contradicts analysts' expectations of a 0.1 increase in producer prices. Now, this drop in producer prices is actually being attributed to low energy prices here in the country, which you can say, okay, perhaps it's a one-off. On the other hand, it's coming off the back of low inflation prices. They also fell here in Germany last month. Now, Germany, of course, is Europe's biggest economy, and an absent uptick here in inflation could be a worrying sign for the Eurozone's policymakers. Let's remember that they've designed their monetary policy around making sure that we boost inflation, which has been low for 2 years now in the Eurozone. So we can probably guess that Eurozone policymakers will be looking at the producer prices in Germany for the months to come very closely.
Well, thank you very much, Janelle, for those updates. We'll sure keep an eye on Fed and BOJ. Now in Egypt, that country expects to privatize 2 or 3 state-owned companies via listings on the stock exchange in the first year of a privatization program. This is according to the chief executive of government-owned NI Capital. The program will last for 3 to 5 years and will start with state-owned oil companies, but will also include state-owned banks. NI Capital is a government-owned, privately managed financial institution that is part of the National Investment Bank. It acts as a consulting authority for the government and manages governmental investment funds. And in Angola, Parliament has approved a smaller 2016 budget that it had originally planned after lower oil prices hammered state revenues in Africa's largest crude oil exporter. Now, the Finance Ministry said in July that government spending will be cut to $24 billion from $30 billion projected in the original 2016 budget after projected revenues were slashed to $18 billion from $24.4 billion. All right, we will go on a commercial break now, and when we come back, we will begin our pre-MPC briefing analyst discussions with Channels TV Business News editor Bosun Omofaye from Central Bank headquarters in Abuja, Nigeria's capital. I'm Chimeze Obiwago, and I thank you for watching. I'll see you again tomorrow at this time.